Hi everyone, I'm Srimati Sridhar with the World Bank, and today we're taking a closer look at the International Development Association, or IDA, and its evolving menu of financial instruments, and how they're offering more budget-conscious, flexible, and impactful ways of giving. Now, to learn about each of these instruments and why they matter, I got a chance to sit down with Paloma Anos Casero, the Director of IDA Resource Mobilization and IBRD Corporate Finance in the Development Finance Vice Presidency of the World Bank. IDA is often described as the world's largest source of concessional finance. But for someone who isn't a finance expert, what does that actually mean?
When we say that IDA provides concessional funding, it really means it provides grants. So this is literally just cash contributions. And then this helps developing countries that really have high needs to avoid getting more indebted. Now, it can also provide interest-free loans. So that's, again, another way to avoid a bigger burden, debt burden on the clients it serves. The third option is IDA providing concessional loans, which means cheap loans. So these are below market rate loans. And again, this is because it's trying to avoid deteriorating further the debt situation of these countries that IDA supports.
I've heard a lot about these different financial instruments. So I know that there is the long-standing concessional partner loans that has been around since I think IDA17. And then in IDA21, two newer instruments were introduced, hybrid capital and the portfolio guarantee platform. Can you explain to me what each instrument is and kind of how it works?
Let me start with telling you the big picture, which is about what are these instruments trying to achieve. They're trying to provide more menu of options, more options to donors. We live in a world where donors face a lot of constraints, especially on the budget side, and they're trying still to really help these poorest countries thrive. So this is innovative ways to try to have donors contribute more in different ways. So let me start with the first, with the concessional partner loan. So what it is, it's a loan. So you think about a mortgage or a car loan. It's the same idea. It's a loan that, of course, is going to pay interest rates. Now, the difference in this case is called concessional partner loan because what it does is it provides a loan to IDA, but it's the interest rate is below the funding costs that IDA incurs when it goes to markets. So that frees up resources. These resources help IDA leverage more and provide more financing capacity to the countries that it serves. So that's the first instrument. This allows donors to have yet a loan that it will provide an income stream to the donor during the period of the loan. So that's one instrument. The second instrument is the portfolio guarantee platform. That, if you think about it, is an insurance, again, to protect IDA's balance sheet, because IDA lends to countries that have high risks. And so you always have in mind, what if one of these clients meets the payment obligation? What will happen, right? You need to have coverage. So this is a guarantee platform where you have several donors that come together and share the risk of any potential temporary loss when you have one of these clients that may miss a payment. So it is interesting for IDA because what it does, it lowers the credit risk that IDA incurs. By doing so, it frees up capital and it allows IDA again to have more financing volume to serve the clients in need. What is in it for the donor? What it's doing is offering an option that doesn't require an upfront cash payment. And in a world where donors are facing tremendous fiscal constraints, that offers that advantage. The third option is the hybrid capital. The hybrid capital, what does it mean hybrid? We call it hybrid because it is a hybrid. It has both debt and equity elements, and let me explain to you what it means. It has debt elements because what it does, it provides a long-term support to IDA. Think about like a long-term loan. And then it also supports the equity part because it builds up IDA's equity capacity. For the donor, it allows the donor to be part of, contribute more to IDA equity. So think about a shareholder that has greater now influence, because this comes with voting rights, of course. What is in it for IDA? It boosts IDA's equity capacity, and then it allows to lend again more to the countries in need. So all of these three instruments, what they try to do is offer flexible menu of options for donors. It boosts IDA's financing capacity, and then in the end, it really tries to then have more lending to the countries that they need, more concessional funding for the countries that they need the most.
You've just explained how these different instruments work and how they have impact, but looking at the bigger picture, how are these innovations helping IDA reach more people and deliver impact on the ground?
These instruments, what they're doing is they're boosting the financing capacity of IDA to serve these people in need and to offer a brighter future. They finance investments in critical education, in health, in infrastructure. They help provide more opportunities for a job-rich growth agenda in many of these countries. So I would just say in closing that at this critical juncture, what these instruments do is to help IDA be more agile, more flexible, and build more resilient responses for a brighter future for this generation and future generations to come.
A huge thank you to Paloma for sitting down with me and explaining the what and the why behind these financial instruments and why they matter so much for IDA in this evolving development landscape. Now we'll be diving deeper into each of these instruments in some upcoming episodes, so make sure you stay tuned.